is riding a roller coaster, and navigating it can feel like a challenge. Welcome back to the Markets with Mike. Today we have investment advisor Michael McGlaughn, who will break down what's driving these market swings and what it can mean for your retirement strategy. So let's just jump right into it, Michael.
Sounds good.
We've seen this quite a bit lately. A major tariff decision was delayed, sparking a surge in the markets. So what should people planning for retirement consider when thinking about all of this uncertainty?
So I really think in volatile times, it's good to remember two things. One is evaluate your risk tolerance. Are you still in line with your risk tolerance, or has your risk tolerance changed? You have to remember that investing is not a set it and forget it forever approach. So you may not be as comfortable with risk as you were 5 years, 10 years ago. So go back, reevaluate your risk tolerance, and make sure that how you're invested still lines up with what your risk tolerance is now. The second thing is rebalance. When the markets are volatile, we have a lot of up and down swings. It can be a great time to rebalance. Rebalancing is important because if you started out in a 70-30 portfolio 10 years ago, or 5 years ago, or 2 years ago, and the market has climbed a bunch, you may be a lot more aggressively invested now just because of market growth. So those can be good times to rebalance, reset, get back to what your target actually is. And then also to take advantage of losses. Remember the golden rule of investing: buy low, sell high. Rebalancing forces you to do that. So look and see if you've got that set up, or talk to your advisor about making sure that you're getting rebalanced on some kind of regular cycle.
And that kind of just leads right into my next question, which is how can people stay confident with all this movement in the markets?
Well, so movement in the markets is nothing new. We a lot of times feel like it is new because the circumstances that cause it may be different. But we have seen this going all the way back into even the 17 and 1800s. There were panics, there's been depressions, there's been all kinds of things, corrections, market downturns, and so forth. So it's nothing new, and we always come out of it on the other side better than we were before. And I think that will continue to be true as we go into the future. So it's not anything new. The most important thing is to make sure your plan, your risk tolerance, and your investment portfolio align with where you are today as far as your time horizon, your goals, and what level of risk that you're comfortable with.
So what are some simple steps for people to stay steady despite the market ups and downs?
Well, so regularly reviewing with your advisor or reviewing your investment portfolio, that's one. As I mentioned earlier, rebalance. Have a program of rebalancing in place, or talk to your advisor about making sure that that's set up.
Right.
And those two things, in addition to having a plan and sticking to your plan and making sure your plan evolves as your time frame changes, as you get closer and closer to retirement, making sure that your plan is evolving with you on that. Those are the best things to do to make sure that you can ride through any turbulence that we have in the markets.
Well, those are 3 simple, easy steps, not hard, that can help give you a little bit of peace of mind. So now I guess let's just jump right into the article highlights for the week, if you want to sort of touch base on those for us.
Absolutely. So, of course, last week was another interesting week in the market, as every week has been here recently. The U.S. stock markets, though, surged as President Trump announced a pause on European Union tariff hikes, signaling some potential progress in trade negotiations there. Again, well, as we have said, we'll have to kind of take a wait and see approach to how long that lasts and what the markets will do in reaction to that. The Dow Jones last week climbed over 300 points. Looks like, at least for now, some optimism from investors in the market. So again, kind of just have to wait and see if that continues to last, or if we'll be back into the same pattern of volatility.
Right. All right, well now I have another dad joke for you.
All right, I'm ready for it.
This one's pretty good. Okay, so dogs can't operate MRI machines, but cats can. feel like that's something the boys would.
Oh, I've totally heard that joke from them. I was
Uh-huh.
going to say that is definitely. Did you call Russell?
I should have, honestly. We should phone them in and get them to do a dad joke.
They would.
They have some good dad jokes up their sleeves for sure.
They would love that. All right, this week in history, 1944, June 6, 1944. This is the 80th anniversary of the D-Day invasion of northern France, which was the successful Allied invasion of the European continent and was very central to victory in World War II. So very important there.
Absolutely. Also in 1956, this one was kind of crazy to me because if this happened in today's world, oh my goodness, could you imagine? But in 1956, city officials in Santa Cruz, California banned rock and roll music at public gatherings because they called the music detrimental to both the health and morals of the youth and community.
Well, they like the movie Footloose, you know. They couldn't have the dance and rock and roll music. So
that's true.
And our last one on This Week in History, 20 years ago, 2004, former President Ronald Reagan passed away June 5th, 2004, after his battle with Alzheimer's. Hard to believe that was 20 years ago. Well, if you're feeling uneasy about market volatility right now, you're not the only one. A lot of people are, and the truth is that market swings are a reality, not a possibility. Like we said, historically, we see them all the time. But here's the good news. You don't have to go through the ups and downs without a plan. So with the right strategy, you can take advantage of the highs and the lows in the market. And you can protect yourself during those times of volatility and during those low times or corrections in the market. And that's what is central to having a solid written financial plan. So through our process, we do a couple of things, Leah. We optimize your gains when the market is strong so that you can build more wealth for your future. Talked about rebalance earlier in this episode. So we can put strategies in place to preserve and help protect your savings in a downturn. Again, goes to rebalancing, risk tolerance that we talked about.
Right.
Make sure that your nest egg stays stable. And third, we can tackle some big financial risks like inflation, rising taxes, unexpected healthcare costs, before they impact your retirement. But the time to prepare is now. It's not really something that you should put off. Reacting to market swings after they've happened is a mistake that too many people make. We can't time the market, we can't predict the future, so now is the time to act. So take some proactive steps to get your plan in place. We are offering a free consultation, free volatility review to help you get started with that. If that's something you're interested in, you can reach out to us and contact us. No obligation, just a review to sit down with you and help you look at where do you stand right now with your plan.
Don't risk your future by ignoring your concerns. Your concerns are valid, and it's something that needs to be addressed. So please give us a call at 256-467-4382.